Right, what's up, everyone? So today we're just going to be going over the trade we ended up taking yesterday at New York Market Open. Because it was yesterday and we're recording this the day after on Friday the 9th. There's no arrows on the chart because obviously the broker doesn't put the arrows on the day after for some reason. But we will be dropping proof of the trade that we posted in our Telegram in between this. So yeah, essentially just going to be covering that trade, how we ended up capturing 110 pips short of market open, a nice 1 to 2.97 risk to reward, and yeah, let's get into the video. Right, so looking at the daily chart here, obviously we don't trade the daily chart, we kind of scalp the low time frames because we're trading on funded accounts. But if we just a little bit of extra added confluence here, from the October high down to the November low, we can see the price was essentially mitigating this sell side leg, right? And as you can see here, between the 618 and the 786, price was failing to close above and kind of mitigate OTE or optimal trade entry of this leg, which again was a nice little added confluence that we may begin to see rebalance lower, potentially towards these draws here. And we were trading well back into discount of this leg. Get rid of OTE. We can also see that price was basically delivering into this daily sell side gap here. The price kept wicking into but failing to mitigate and displace above and invert. If we go down to the 4 hour, we can also see that coinciding with the daily sell side gap was a 4 hour gap as well. So as you can see here, price tagged into it, wicked into it, and displaced, saw some huge sell side displacement out of it, which again was added confluence after sweeping and souping the Boxing Day high, soup, SFP, whatever you like to call it. But again, that initial reaction after taking out that key area of high time frame liquidity was again great for us, because when you're finding a draw on liquidity, yes, we had the clear previous day high above, but after the huge strong displacement move to the downside, after obviously seeing OTE back into discount and leaving behind all this trendline LRO here, it was pretty clear that obviously with what we're going to break down further as well, the price did want to go down. So also what we saw was that during Asia, so this was on Thursday morning, obviously GMT, Asia session, we can see that price basically obviously delivering from the high time frame PDRA after making the high time frame soup. We ended up getting a strong hourly inversion to the downside, and then obviously bearish retesting it during London, which again was great confluence after also seeing an hourly bearish retest of this gap, which was also a 15-minute bearish retest of this sell side gap here inside the hourly gap. So we were failing to displace above the hourly inversion and failing to displace above the 15-minute bearish retest. Also had a 15-minute and also another 15-minute soup inside of the PDRA, and failing to obviously displace above the high liquidity sweep, failing to displace above a FEG. If you watched our trading strategy model, then you'd know that this is obviously ticking a lot of boxes already. So obviously we know cool that our draw on liquidity is going to be lower. Bias wants to go lower, especially after the last two, I believe, being Tuesday and Wednesday, so the 6th and the 7th. New York sessions, price basically just due to swang down at open and then obviously just kept rallying up throughout the session. Wednesday, I believe, price just slow grinded up to the upside, well over like, I believe it was like 120 pips, I believe. But yeah, so anyway, going into New York session open, we had our clear draws below. We had Asia's low here. We had this wick here, which price ended up kind of faffing about on the 1 minute. So we ended up just closing out here. It was only a difference of about 9 pips, I believe. Yeah, give or take 9 pips. So we had London's low and what's also considered a data low. It wasn't macro data, as in like a macro data release from like the US or anything. It was more just something to do with Russia or Venezuela or something like that, which caused a huge 1 minute wick, mitigating all this 1 minute LRO here. Again, that would have been a great clear draw, or it was even. So we had London's low, we had Asia's low. We can see so that price was delivering obviously from the daily gap, huge sell side displacement, hourly inversion, hourly and 15-minute bearish retest of the gap, 15-minute soup of this high here, failure to displace above both inversions and the soup. Obviously clear draws below, obviously knowing price wants to go lower. Market opened, 3-minute IFVG. We also had a 2-minute IFVG with some great strong momentum here. Took out London's low, took out Asia's low, and again a nice 1 to 2.97 risk to reward ratio, or 110 pips caught on MNQ at open. Obviously, if you did watch our trading video, our trading strategy video, you would know that this ticked a lot of boxes for us. It was pretty textbook. If you didn't, then go and check it out. But you can also see that as well as those lows here, we had huge trendline LRO here, or low resistance liquidity that price would have wanted to take out as resting stops.
See you in the next episode. Magnus out.